Are you staring at a tax bill from HMRC that just feels, well, impossible to pay? Don't worry, you are definitely not alone. In this guide, we're going to break down exactly how to set up what's called a time-to-pay arrangement. Think of this as your clear, step-by-step walkthrough for 2026 on how to take back control of your tax debt and, most importantly, protect your business.
And just so you know, this whole guide has been put together by the tax experts at Pro Tax Accountant. These are the folks who navigate these exact situations for their clients every single day, so you can be absolutely sure the information you're getting is professional, completely up to date, and really designed to help you succeed.
So let's get right to it. Are you looking at a tax bill and just getting that sinking feeling in the pit of your stomach? Wondering how on earth you're actually going to pay it? It's a situation that so many brilliant business owners and self-employed people find themselves in, and often it's through no fault of their own.
But here's something you need to know, like right now. If you ignore the problem, HMRC has some pretty serious powers. They can, and they absolutely will, take the money they're owed directly from your bank account. And a lot of the time, they don't even need a court order to do it. That's why being proactive isn't just a good idea, it is essential for your financial survival.
Okay, so here's what we're going to cover. We'll look at the reality of ignoring HMRC. Then we'll introduce your lifeline, the time-to-pay arrangement. We'll walk through how to get prepared for success, compare the online versus the phone routes, talk about why sticking to the plan is so critical, and finally, how to get some expert help on your side. Right, let's dive in.
First up, let's be totally clear about what's on the line here. What actually happens if you just bury your head in the sand and kind of hope it all just goes away? To make this real, let's imagine someone. We'll call her Sophia. She's a fantastic freelance web developer based in London. She's just filed her self-assessment return. And bam, she's facing a £15,000 tax bill that she just cannot cover right now. She's worried, and she has no idea what to do next. Now, if Sophia ignores this, the consequences get pretty severe pretty fast. HMRC can literally take control of her business assets, her computers, office furniture, the lot. Those goods can then be sold at auction. If she had a limited company, they could even start legal action to have it shut down. All the while, interest and late payment penalties are just piling up, making that debt bigger and bigger every single day.
Okay, it all sounds a bit bleak, I know, but there is a clear way forward. Let's shift from the problem to the solution, the time-to-pay arrangement. This is the lifeline that HMRC offers to people in Sophia's exact situation.
So what is it exactly? Well, a time-to-pay arrangement, or a TTP as it's often called, is a formal binding agreement you make with HMRC. It lets you pay off your tax debt in affordable monthly chunks over a set period of time. It's a structured, official way to get yourself back on track. And the benefits are immediate. As soon as a TTP is agreed, all that scary enforcement action we talked about, it gets paused. This lets you keep trading and protects your vital cash flow. And here's a big one. This is a private arrangement between you and HMRC. Nobody else needs to know, so your business reputation is totally preserved. It just gives you that crucial breathing space.
Now, here's a pro tip, and honestly, this might be one of the most important things to understand. A time-to-pay plan isn't a right you can just demand. It's given at HMRC's discretion. They draw a really clear line between taxpayers who are genuinely unable to pay and those they think are unwilling to pay. Your whole approach needs to prove you're in that first category.
That brings us to our next step, preparation. And this truly is where most people go wrong. You just can't pick up the phone to HMRC and hope for the best. You absolutely have to have a plan. This quote really says it all, doesn't it? Being proactive and prepared is completely non-negotiable. If you call HMRC without knowing your numbers inside and out, your request is probably going to be rejected. Or even worse, you might agree to a plan you can't actually afford, which just sets you up to fail from the get-go. So here it is, your essential 4-point checklist before you even think about contacting HMRC. Number 1, know your exact debt, and that's across all taxes. 2, get all your returns filed. They won't even talk about a VAT payment plan if your VAT returns are late. 3, create a cash flow forecast. And 4, based on that forecast, know exactly what you can realistically afford to pay each month.
So what's a cash flow forecast? Don't let the name intimidate you. It's just a simple projection of all the money you expect to come in and all the money you expect to go out, usually over the next 3 months or so. Think of it as a financial weather forecast for your business. It's the proof you show HMRC that your proposed payment plan is actually affordable and sustainable for you.
Okay, so once you're prepared, you've got two main ways you can apply for a time to pay arrangement. Let's break down the online and the phone routes so you can figure out which one is the right one for you. The online self-service route is brilliant if you fit the very specific criteria. It's automated, it's fast, and you get to avoid a potentially stressful phone call. But the eligibility rules are really rigid, and it's generally limited to plans of 12 months or less. The phone call, well, that's for everyone else. People with bigger debts, more complex situations, or anyone who needs a longer repayment term. It's a proper negotiation, and that's where all your preparation really pays off.
Now, this slide is super useful because it lays out the specific rules. Let's look at our freelancer, Sophia. Her £15,000 self-assessment bill is well under the £30,000 ceiling. So as long as she applies within 60 days of the payment deadline, she can use that faster online route. For VAT and PAYE, you can see the limit is higher at £50,000, but they've each got their own little conditions you've got to meet.
If you do have to make that call, this is your checklist. Have that cash flow forecast and a detailed income and spending statement right in front of you. Be ready to talk about any savings or assets you have. And understand this key idea. HMRC will often ask for up to 50% of your net disposable income. That's the money left over after all your essential bills. It's kind of a test to show you're taking it seriously. You have to know your numbers to negotiate. Stay with me. The next point might surprise you. So, you've done the hard work, you've prepared, you've negotiated, and HMRC has agreed to your plan. You can finally breathe a sigh of relief, right? Well, yes, but you absolutely cannot relax. Getting the agreement is only half the battle. Just think about it for a second. You have this formal, binding agreement. What do you think happens if you miss just one single payment, even by a day? The answer is brutal. The plan is cancelled. Not a warning, not a slap on the wrist. It's an automatic default. The second you miss a payment, HMRC's enforcement process kicks right back in. You're back at square one, only now you're in a much worse position because you've already broken one agreement. Their patience will be gone. And don't forget this number. Even when you're in a time to pay arrangement, interest keeps getting charged on whatever you still owe. For 2026, that rate is 7.75%. So while the plan is a massive help, that debt is still costing you money every single day. So here's the final essential pro tip for this section. The very same day your plan is agreed, set up a direct debit for the payments. Don't wait. Then you have to treat this payment like it's your payroll or your rent. It is a non-negotiable, top priority expense that absolutely has to be paid no matter what. All right, let's move to our final section, how an expert can make this whole process so much smoother and more successful. Because while you can do this yourself, sometimes calling in a professional is the smartest move you could possibly make. But first, a really important point. The information we've gone through here is for general guidance only. It shouldn't be the only thing you rely on to make financial decisions. Before you do anything, you must consult a qualified professional, like the tax experts at ProTax Accountant. This is exactly where the experts at ProTax Accountant can be a total game changer. They can handle that entire negotiation with HMRC for you. And because of their experience, they can often secure longer repayment terms than you might get on your own. They make sure your proposal is robust, credible, and something HMRC is far more likely to say yes to. The key thing is you don't have to face this alone. Get in touch with them using the details you see on the screen. I really hope this guide has given you a clear, confident path forward. Taking control of your tax debt is the first step to taking back control of your business and your peace of mind. For more essential tax guides and tips just like this one, make sure you subscribe to the ProTax Accountant channel. Thanks so much for watching.